Hello, guys. How you doing? Welcome back to the podcast hosted by your favorite uncle, Uncle Kevin. Today we'll be talking finance with Uncle Kevin. Without wasting much time, let's get into it. Today we'll be looking into one of the stories that we touched on a few weeks ago, which was about the Luna coin. It keeps on making headlines. A lot of people lost a lot of money, man. A lot of money. I couldn't believe it. I still cannot believe the numbers. Apparently, $3 million turned into $3. I do not know if you believe that, but yeah, $3 million turned into $3. I laugh not because it's funny. I laugh because it's unbelievable how much one can lose. You know, when you lose that much, damn man, it's a lot. As we continue to look at it, there's this article written on CNBC by Mackenzie Sigalis. Some investors got rich before a popular stablecoin imploded, erasing $60 billion in value. Man, something has to be done about this crypto stuff. One of the greatest things about crypto when it was introduced to me was it's gonna be decentralized, not controlled by the government, because we do not trust the governments. That's just how the people are. That's just the most popular thing is we do not trust the governments. We want to be decentralized. We want to put power back in the people's hands. But what tends to happen a lot of times is when power is in the people's hands, it gets abused. And in this case, I feel it's the same thing that happened. And now we find ourselves in a situation where $3 million turned into $3. In May, the collapse of one of the most popular US dollar pegged stablecoins project cost investors tens of billions of dollars as they pulled out in a panic that some have compared to a bank run. A stablecoin known as Terra USD and its sister token Luna experienced a pretty spectacular run-up before it all collapsed. Venture capital firm Pantera Capital tells CNBC their $1.7 million investment in Luna turned into $170 million while Hack VC and CMC Global exited their Luna positions in December and March respectively. So yeah, a lot of people, the good thing with what I've read and done my research on Luna was it was actually one of the most stable coins. It's in its name. I think it had a 20% promised growth from the day that it started, and it was sustainable for people. People thought this was a great space to put your savings. This was a great space to do whatever. And what happened in this case was as the crypto crash started to happen, people started looking for stable coins to put their money whilst the crash was happening. And what happened is, as people started putting money into Luna, someone somewhere did the dump thing. The what do they call pump and dump? Somebody did the dump and then started dumping a lot of money, and a lot of people didn't realize what was going on because this was promised to be a stable coin, but the stable coin had issues, and boom, we went from $100 down to $1, or is it 10 cents? Man, it's just ridiculous. In May, the collapse of one of the most popular US dollar pegged stablecoin projects cost investors tens of billions as they pulled out in a panic that some have compared to a bank run. But before that, the stablecoin known as Terra USD, and this is that had experienced pretty stickler run up, and some investors made a killing before it collapsed. The scheme relied largely on faith and the promise of future returns, plus a complex set of code with very little hard cash to back up the whole arrangement. Unlike USDC, another popular dollar-pegged stablecoin, which has a fiat assets in reserve as a way to back their tokens, UST was an algorithmic stablecoin created and administered by Singapore-based Terraform Labs. It depended on computer code to self-stabilize its value by creating and destroying UST and Luna in a sort of supply and demand seesaw effect. For a while it worked. UST held its dollar peg and the Luna token soared. The Luna tokens rose to more than $116 in April, up more than 135% in less than 2 months. Traders were able to arbitrage the system and profit from deviations in the price of the two tokens, but perhaps the greatest incentive of the entire scheme was an accompanying lending platform called Anchor, which promised investors a 20% annual percentage yield on the UST holdings. This is something that a lot of analysts said was unsustainable. But listen, if something is offering you 20% in terms of your savings, I'm all for it, man. I'm all for 20% because a lot of times, just keeping your money in your bank account, it's at a 0.5% saving interest, and inflation right now is like, I know in Canada, this is just me guessing, it's probably at 3.5%. So you're not really making money by keeping money in the bank. And where inflation at, I read somewhere it was projected to reach 7%. So it's like if you're making 0.5%, you're really making a loss. So if someone offers you 20%, that's a lot of money. And you know that the S&P 500 gives you on average 7% over a period of time in terms of the money that you make. So if something offers you 20%, this is something that a lot of people would be interested in. At 20%, I think it would take you almost like 5 years to double your money. So if you put in 400,000, the chances of you hitting a million in a couple of years is something that's lucrative and something that you'd look into. And a lot of people, especially those that started saving and investing late, would have seen this as a massive opportunity to get into this. And yeah, widespread buy-in and public PSAs from respective financial institutions lend credibility to the project, further driving the narrative that the whole thing was legit. Most everyone was happy until it all came crashing down in early May. It's sad, man. Like in April, it was up 116 and it went down to 10 cents. Most everyone was happy until it came early May. Although the project did amass about 3 billion worth of Bitcoin in its reserve as a backstop for UST when the price of Luna became unstable, investors rushed out of both tokens, sending prices off a cliff. The Luna Foundation guy tried to restore UST's dollar peg by spending almost all of the Bitcoin in its reserve. It didn't work. At their height, Luna and UST had a combined market value of almost 60 billion. Now they're essentially worthless. The entire episode has laid bare the advantages of experienced large-scale investors over retail investors gambling on hope. Yeah. One person posted on Reddit that they didn't think they would have enough money to pay for their next semester at school after losing money on Luna and UST. Another investor affected by the crash tweeted that she and her husband sold their house and bet it all on Luna, noting that she was still trying to digest whether it was actually happening or just a nightmare. See, people, here's the thing, man. There's no such thing as get rich quick. You gotta work. It's a marathon. Anything that seems too good to be true is too good to be true. The number one rule when it comes to investing is only invest money you're willing to lose. Do not invest money you are not willing to lose, because there is no guarantees. There is no get rich quick. It doesn't work that way. Yes, it's a game. It's a game that's played over and over. But the number one thing is it's all risk. High risk, low risk, whatever risk. There is risk you will lose. This comes with the territory. So do not put money. Do not sell your house. Do not do something stupid. Do not do something in hope that something works out. Yes, you sold your house. You invested it on Luna. I hope you understood what Luna was. You know what I mean? Like, do not try and make a quick profit and then lose and cry. You cannot cry. That's the game that you're playing. There is a winner. There is a loser. Someone is bound to lose. Okay? In this case, these people who sold their house, which I do not understand why you would sell your house only to invest it in a crypto that you do not understand how it works. Now look at you. Where will you stay? Just to try to digest whether what was actually happening or just a nightmare. Others are contemplating suicide after losing all they've got. There's no point of committing suicide, man. It's just a thing. It's crypto, fam. It's a new technology that we are all learning, and we're trying to figure out how to make money off of it. You win some, you lose some, okay? I'm lost about to commit suicide in a chair. One commenter posted already, I lost my life savings in the investments of Luna UST. The worst thing is that 3 weeks ago, I proposed to my girlfriend. She doesn't know anything. I lost $62,000. I'm here. I don't know what to do. Listen, if you have $62,000, the last thing you want to do is put it in crypto. The last thing you got to do is put it all. You cannot put all your eggs in one basket, fam, when it comes to crypto. You got to be very careful. You have a thing called Bitcoin, which was making people a lot of money. It came from like $56,000 down to $29,000. Like, yo, that should have been like, yo, what's going on? And pay attention to it. But I think, yeah, man. Among the winners of the UST flash crash are Pantera Capital hedge fund that saw 100x return on investment. You see, you should also know when to exit when it comes to investments. Joey Krug, the fund's co-chief investor officer, told CNBC that in the primary fund where they held and traded Luna, they sold about 87% of the position from January 2020 through April. Pantera then sold another 8% in May once it was clear the UST pair get broken. At the end of it all, Krug says Pantera got stuck with about 5% of their position. All that liquidation translated to a return of $171 million on a $1.7 million initial investment, assuming remaining Luna they own continue to be worth nothing. So yeah, the other thing that happens a lot of times with investing is Warren Buffett has a quote where he says, you want to buy when everyone is running and you want to sell when everyone is buying. Essentially, what this means is you have to have an exit strategy when it comes to investing, especially in things that are speculative like crypto. You have to know at what point do you reach your profits and exit, and then, let it go. A lot of times what happens, and the thing that's the challenge with a lot of people, is seeing the success of Bitcoin. A lot of people thought this would be an opportunity to get rich quick, because if you get in, you spend $62,000 on I don't know, when Luna was $50. You're assuming if it rises to the level of Bitcoin, hits $10,000, man, you're super rich. But the thing is, the chances of that happening are super low at this point, because Bitcoin might just be a unicorn. Bitcoin, Ethereum, these things might just be a unicorn, but you never know. So if you're willing to take a risk, take it. But it's called risk, okay? Yeah, there's a chance you lose everything. We think it's one of the most promising coins for the coming year, Mohed said of Luna. So many people are just discovering it and it's just starting to trade it. But Krug says the firm's initial decision to liquidity came to risk management and rebalancing the fund. Risk management. For the large portion which we saw over 2021, part of 2022, it was really simple risk management, said Krug. It kept becoming a larger and larger part of the fund, so we had to de-risk it, since you can't really run a liquid hedge fund with one position being super large portion of the fund. When particular notice breaking in May, so again, it was really just seeing the peg break from a few cents and pattern matching it to historical currency pegs. Continued Krug. So you can see that the big boys, what they're doing is they keep reading and they keep looking at the data. You don't want to be ignorant and be left on a dying horse, because yeah, you will be left crying, almost about to commit suicide. Let's look at these people with tattoos of the Luna thing. Listen, man, crypto, I do not know how it gets overhyped as a asset, as a financial asset. It's just an asset. It's like buying stocks. There's no emotions in this, and for some reason, when it comes to the crypto space, people become super fanatic. It's to the moon. It's our thing. But the thing with money is, money has zero emotions. It really doesn't care about you, and in a way, you don't have to care about it. It just goes wherever the value is. That's where it goes. In as much as we are saying $60 billion of value was wiped out, it just means 60 billion moved to another section, to another sector of people. Somebody made off that 60 billion. It didn't just disappear. Money doesn't vanish into thin air. It trades hands. So, why? Man, this is sad, man. This is really sad. Is there a road to redemption? Terra's backers have voted to revive the failed venture. The proposed rebuild involves a new Terra blockchain and getting rid of the beleaguered stablecoin that helped trigger the meltdown of the original project. It could also mean redemption for the institutional and retail investors who got wiped out. For those who saw a big loss, the relaunch could potentially translate into an opportunity to recoup losses on initial investments. Delphi Digital, for example, has disclosed that it is currently sitting on a large unrealized loss after miscalculating the risk of a debt spiral event coming to fruition, and CoinDesk reporting shows that SEO-based Hashed Ventures lost over 3.5 billion. Man, these are jobs. These are people's. It's just sad. It is sad. Terra's. Okay, let's get into this.
Climbing since February, it's now at an all-time high. If Bitcoin were to move sharply in either direction, it could catch some of those leveraged investors offsides, and as Fundstrat puts it, compound a move in either direction. On top of all that, Bitcoin is still very much tied to the macro outlook, which is still looking tough for some of the riskier assets, with quantitative tightening starting and the Fed raising rates. Bitcoin right now is struggling to avoid its 9th straight week of declines, trading pretty much sideways for most of the week, near $29,000.
Okay, on to the top stories. We mentioned earlier how Ether prices are getting hit today. The second largest cryptocurrency by market cap is having a rough week, down nearly 15% since Monday. That's leading to unusual liquidation activity, according to CoinDesk. Investors pulled out about $236 million from Ether-tracked futures, which usually sees fewer liquidations than Bitcoin. That could be a sign that Bitcoin is becoming a safe haven amid the volatility hitting the rest of the crypto markets. Tether is expanding into the Polygon network, making its dollar-backed USDT token now available on 11 blockchain networks. With a market cap of more than $72 billion, USDT remains the most popular stablecoin in crypto. For the most part, it's been able to withstand the volatility affecting other tokens, remaining pegged to the US dollar on a one-to-one basis. Backers of the Terra blockchain network just voted unanimously to burn 1.3 billion UST tokens. Burning cryptocurrencies, of course, means to remove them from circulation. By burning 11% of the UST reserve, the backers hope to reduce the bad debt of Terra's economy and restore UST's one-to-one dollar peg that recently crashed to near zero. With Luna pegged to UST, this mass burning is expected to help bolster Luna's price as Terra plans to bring back the token, which we'll explain more in a bit. As we just mentioned,
Man, this just goes back to tell you, man. The crypto space is a space that I feel like on this podcast we're gonna have to learn a lot more about, because for me it's just becoming interesting how they, especially to see how they'll recover this Terra thing. From a brand perspective, I don't see how it will work. But listen, if I'm riding a dead horse and there's hope that it will wake up, hey man, I'm trying to make my money back. Like.
And there's still a lot going on with Terra and the fallout of UST plummeting to zero. Earlier this week, Terra backers approved a plan to revive Luna, the token tied to failed algorithmic stablecoin UST. The new version of the Terra blockchain is expected to go live overnight with a Luna airdrop at 2 a.m. Eastern. As part of the Luna revival, Terra plans to distribute tokens to holders of UST and the older Luna digital currency, which will be renamed Luna Classic. Whether or not the revival plan will work remains to be seen, but the fallout from the collapse of UST is still weighing on crypto markets and sentiment. We took a deeper look at how we got here in the first place, starting at the beginning of the Terra project. The sudden collapse of Terra sent shockwaves through the crypto industry. According to Elliptic, holders of UST and Luna lost a total of $42 billion. Major investors like Coinbase Ventures lost millions of dollars as well. Galaxy Digital CEO Mike Novogratz, he's stuck with a tattoo of Luna on his arm. It's a shocking collapse of a cryptocurrency that reached record highs just a few weeks earlier. So we have to talk about how we got here. Terraform Labs was co-founded in January 2018 by Daniel Shin and Do Kwon, a graduate of Stanford University and former CEO of networking technology startup AnyFi. A year later, Terraform launched its governance token, Luna, with a starting supply of 1 billion tokens. Then, in September of 2020, Terra launched its algorithmic stablecoin, Terra USD, also known as UST.
In the middle of 2020, right around when DeFi summer happened in the crypto space, I came across the Terra blockchain because it was one of the few blockchains that actually had significant amount of revenues. They made a lot of network fees. And what made them unique was that they had one of the first, decentralized stable coins that actually saw real world traction with, millions of users in South Korea.
Let's take a second to talk about algorithmic stablecoins and how they work. Stablecoins are called that because they're designed to remain pegged to a certain price, usually $1 US. Traditional stablecoins are considered over-collateralized, meaning the token's operator holds real fiat currency in reserves to support the stablecoin's price, $1 for $1 worth of that token. Algorithmic stablecoins are considered uncollateralized. They don't use fiat currency to back up their value. Instead, these tokens operate on a network alongside another cryptocurrency. They maintain their pegs through algorithms that encourage traders to take advantage of price changes in both the stablecoin itself and that secondary cryptocurrency, in this case, the Luna token.
So the idea is that at any given time, you can trade in $1 worth of Terra USD against the protocol for $1 worth of Luna, and then vice versa. So you can sort of think about Luna as absorbing the price volatility of Terra stablecoins.
And in the 2 years after its launch, UST and the Terra blockchain saw insane growth.
Terra has really evolved into being more than just, an algorithmic stablecoin. It has also
This is the crazy part. It's how smart these people are, and how they communicate and how confusing it is. Like, oh yeah, this works off of the blockchain. So now you have to read what the hell is a blockchain, and then you have to go down, and then you have to be like, okay, how does the Luna swallow the volatility of Terra? How are these two things? And then you're like, you know what? I'll just put my money in there, 20%.
become a layer one blockchain. And it went from being an underdog in 2020 to being, a top 10 crypto and really on its way to being the number one stablecoin in the world.
One huge driver of growth was a service called Anchor.
The Anchor protocol is a borrowing, saving, lending platform inside the Luna ecosystem. The mechanism there was if you are a saver, so you can deposit UST and earn 20% yield, which, sounds too good to be true. On the other hand, you could borrow UST and you pay maybe 25% in APR, but there's a mechanism called the distribution APR where you are actually being paid anywhere from, let's say, 25.1% to maybe even over 100% for borrowing. So if you log onto YouTube and you search for videos around how does Anchor protocol work, you're going to find a bunch of videos that are like how to make passive income by borrowing on Anchor protocol.
With all this attention, UST surged to an $18 billion valuation. And to maintain that value, Do Kwon turned to Bitcoin to support Terra USD's reserves.
We usually buy about like $150 million clips every few days. And we do some of those things through board resolution. So that really depends on how fast people get back. But I would say we've bought about $1.6 billion so far. And I think by the end of April, we should be at around 3.
This latest move rallied the so-called lunatics, pushing the price of a Luna token to an all-time high of $119. But crypto markets have struggled so far in 2022, with growing concern of a recession and bear market. Bitcoin's price was slowly falling, and fears of a crypto winter were rising. For Terra, those fears culminated in the second week of May.
I'd say the trigger was on May 7th, when on the platform, a decentralized finance application platform called Curve, which is often referenced by traders to assess the stability of the peg of stablecoins, there was a major trade that was made where someone came in and exchanged $85 million of UST for another stablecoin. And this started to cascade into additional exits in these liquidity pools. And this caused the initial depegging and the beginning of the spiral. The next kind of key event or moment would be the series of exits from Anchor protocol. Luna really should have a much higher market cap than UST for the entire ecosystem to be valuable and facilitate these redemptions. However, in this period, the market cap flipped, and this further exacerbated the legitimate fear of Luna and UST holders, thus deepening the spiral as more people were fleeing for the door. Then, essentially, I'd say the last piece is the deep hyperinflationary spiral. Luna hyperinflated over 8,000% in a matter of just 2 days, and there is now trillions of Luna in circulation. This is all augmented by the fact that this ecosystem was under-collateralized by its Bitcoin reserves, so people are incentivized to not be left in the dark and flee for the doors and be the first out.
That's all for this week, but we'll be back again next Tuesday after the Memorial Day weekend. See you then.
Yeah, man. It's crazy how this coin got here, but it had great potential. It's just a lot of oversight in terms of, I guess, the business of it and how they thought things would work out, especially like how the lady was explaining how the Luna network or Luna coin works, where the algorithm just prints more Lunas to cover whenever there's a there's a withdrawal. Listen, man, I'm sorry, I don't mean to laugh at anybody, but yo, this is just hella weird. How now they have $1 trillion coins on the market. Anyway, educate me in the comment section, but it's just sad, man. It's really sad when you read and do research on what happened to Terra and Luna, because hey, how you go from $116 to 10 cents, I have no idea. People lost a lot of money, man. But I saw it's up $6. So if you got in at 10 cents, hey, you made somebody. Get out as quick as you can. With that said, this will be the end of us speaking about crypto.